stick on the index, quiet but positive. So that green hue continues.
The markets have picked up. We have fresh 52-week highs on the Nifty.
For the markets, it's flat but with some positive bias. We have seen a 70-point recovery from the lows.
20 points down now on the Nifty. So very, very quiet. It's been that way from the word go. Third day in a row now, by the way. We're going to end with a 1.5 odd point change on the Nifty. The banks, by the way, did a little better.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. Indian indices close at record closing highs even as a volatile session ends with marginal gains. The Nifty Bank also hits a record high, but metal stocks come under pressure. Morgan Stanley's Chief Asia and EM equity strategist Jonathan Garner says that Indian financials are positioned positively compared to other Asian markets, as that the Indian market is very expensive compared to other markets. Dalal Street sees 2 big listings. Well-known ethnic snack company Bikaji Foods lists at an 8% premium over its issue price, while Global Health or Medanta, which runs Medanta Hospitals, debuts at a 19% premium over its issue price. Sources say Income Tax Department has conducted searches at Metropolis Pathology Labs office in Mumbai, Delhi and Chennai, accusing the leading diagnostic company of concealing income. Stock nosedives more than 7%. And we'll also put the spotlight on stocks that were in the headlines. Defense stocks HAL, Bharat Dynamics surged in trade today, while Mazagon Dock Shipbuilders traded 1% higher on account of a strong second quarter. All right, well, those are all of the headlines that we're tracking this evening. Let's also tell you what we have lined up and what's in store for you. It's a packed show this evening. In Market Opinion, we have Jonathan Garner of Morgan Stanley and Lawrence Blanco of CLSA. And in Corporate Voices, we have Pankaj Sahni, Group CEO at Global Health, and Sanjeev Singhal, Director Finance of Mazagon Dock Shipbuilders. All right, on to the first story that we are tracking this evening, the first headline this evening. In fact, it was a day which was quite quiet but volatile for the market. So let's get in Prashant Nair, who's going to wrap up today's trading session for us.
An absolutely flat session is what we had on the index, on the Nifty. There was a bit of selling pressure at 230 or so, but that was bought back and the market finally ended unchanged. Banks had a better session. The Bank Nifty, led by private banks mainly, did a little better than the Nifty, but not much. Mid caps and small caps, those parts of the market sold off a little bit more, 0.5%, 0.75% in that range. On the Nifty, the gains were in names like Kotak, HDFC. Coal India reversed some of its losses from yesterday. The cuts came through in Adani Enterprises, Adani Ports, Apollo Hospitals and Tata Steel were the other 2 names which lost in trade. Broader markets, more declines than advances. And you had names like Apollo Tyres, saw a big move yesterday on the upside, was down today. Metropolis, there was news flow. Paytm was down. You had SAIL, that Steel Authority, Indiabulls Housing, Delta Corp, Aarti Industries and Dredging Corporation, some of the other losers. Gainers in specific pockets. So the rail infra stocks were higher, names like RVNL, IRFC, IRCON. The defense names like HAL, BDL and Mazagon Dock were higher in trade. And some reversals after, the beatdowns at stocks like Campus Activewear, the footwear company, has seen. TCNS Brands on the back of a potential deal and, a bunch of others as well. All in all, it was kind of mixed day with more declines than advances. 2 new listings today. So Bikaji made its debut, a household name really. Good debut. The stock, although, came off the day's high. Global Health, which runs the Medanta Hospitals, that also listed. But that was stronger and actually moved even higher after what was a very strong listing. The market pace has kind of slowed down. Everyone is waiting for the day when we hit new highs on the Nifty. The Bank Nifty, of course, has been making those every day now. Back to you.
Okay, all right, Prashant, thanks very much for that. Let's get in some expert opinion then. Lawrence Blanco of CLSA believes that the Nifty can go past the 20,000 level by the first quarter of next year. He added that the dollar index could stay under pressure till the second quarter of next year. Listen in.
where we saw sentiment extremes into the October lows, as well as a number of market divergences that has led to the current rally that we've seen play out across global markets. And our work that we've done on our cycles into 2023 does suggest that we do overshoot the upside, and we think the S&P can trade above its 200-day moving average. And the Nifty on the back of that should trade to new all-time highs, and we get an upside target closer to the 20,100 area for the Nifty into the first quarter of next year. If we look at the Indian markets through the first half of this year, we found that support around the 15,500 area, and we do think that's shifted up towards the 17,000 to 16,900 area. So that should be a sort of a key floor heading into the first quarter. One of the key setups that we're looking for into 2023 is a more significant top in that dollar index. So in the near term, there is support between 103 and 105. It's basically the 200-day, but also the 2017 and 2020 highs for the dollar index. And at some stage in the second quarter, we do think the dollar does get a rebound, but that rebound forms a lower high, and that's part of the topping pattern that we see for the dollar in 2023. And ultimately, towards the end of 2023, we think the dollar index is trading back towards 95. And that should put the Indian rupee back towards 75 towards year end of 2023.
Okay, well, on to some more opinion then. Ajay Srivastav, CEO, Dimensions Corporate Finance Services, said that it is a good time to take money off the table. He added that new age companies are extremely overvalued at the moment.
My sincere advice to everybody would be, if markets are good high, this is a good time to take money off the table and go spend it on yourself. You know, investing in this market at these prices, valuations, you could be in for a big disappointment compared to many other sectors you want to invest. So if you want to invest, perhaps, I would not recommend equity. You know, strange coming from me, at this point of time, equity investment. Look at a 12-month horizon. You will never make returns to beat the debt returns at this point of time. You'll never make it. So you have two choices. Either you invest now and repent later, sell now, spend it on yourself and feel happy, or put in debt and you'll be a much happier person. It's a tulip mania in a different world altogether. They don't make any money, they lose money, and they still got value. They sell for 200 crores, they make a 200 crore loss. Does it need to be a genius to do that kind of stuff? Man, I tell you, I can find 100 other people who can sell for 200 and make a loss for 200. Ask the airlines, they do it very well, actually. So, I would say just stay away for the time being. These are overhyped, overvalued. They still haven't gone down to Earth. And Earth is still far from them. They're still not there close to it.
Okay, some caution coming in from Ajay Srivastav there, but on to the second headline now. Indian financials are positioned positively compared to the other Asian markets. That's the word coming in from Jonathan Garner, who is the Chief Asia and EM Equity Strategist at Morgan Stanley. In a conversation with CNBC-TV18, Garner also added that the Indian market is very expensive compared to other markets.
Just in terms of household formation, underlying earnings growth dynamics for a young population, Indian financials are clearly differently positioned than, for example, Korea or Taiwan or China financials. We're not focused on financials in those markets where you don't have such positive tailwinds. India is by far the most expensive market in our coverage. In fact, at a record high valuation premium, for example, to Korea, but certainly the valuations are very rich to history and to peers, and that's why it is an underweight for us.
Okay, so that's the word coming in from Jonathan Garner, but let's get to the third headline for this evening then. Global Health, which runs Medanta Hospitals, closed with gains of over 20% after debuting with a 19% premium over its issue price. The IPO, in fact, was subscribed 9.58 times from the 3rd to the 7th of November. Well, let's just take you through a couple of key details with regards to Medanta. Remember that there's a lot of interest in hospital companies. It did list with a premium. The market cap has surged to around 11,000 odd crores versus around over 9,000 odd crores on the upper end of the issue price. Now, numbers from hospital companies continue to be strong in Q2 FY23, the likes of Apollo Hospitals, Fortis, as well as Narayana. So there was enough sentiment on the positive side to support Medanta. Remember, Medanta also comes with quite a strong background or brand name. It is run by cardiac surgeon Dr. Naresh Trihan. It is promoted by him. It's a network of 5 hospitals under the brand Medanta, total of around close to 2,500 beds. They raised around 2,200 crores from the IPO, and it was one of the largest to hit the markets in the past 5 months as well. The company, in fact, raised over 660 odd crores from 52 anchor investors at 336 rupees per share. The total subscription, like I mentioned, was around 9.58 times totally. QIB was strong at around 28.64 times. Now, overall, remember that when Medanta hit the markets, it did come with a bit of a discount already. So there was a valuation gap, and hence it probably bridged it today with the surge that we saw. So Medanta came in at around 18 to 19 times at the upper band. The likes of Apollo was already at over 20 times, along with the likes of Narayana, as well as Max. So there was some amount of bridging, considering that it does come with a strong name as well as margins. Now, Medanta has said a couple of key takeaways is that they have 5 hospitals operational, 6th hospital is under construction. The number of beds will eventually scale up to 3,500 by FY25. Mature hospitals have around 65% occupancy, and they're looking to bring in additional services such as radiation, etc. And they expect the international patient count to be higher than pre-COVID levels eventually as well. That's one of the big kickers within the entire hospital space. In fact, we did speak to the management earlier in the day. Let's listen in to what the management of Medanta had to say to us.
We are currently at approximately 2,500 beds across the network, across the 5 hospitals that I mentioned. That's in Gurgaon, in Lucknow, in Patna, Ranchi and Indore. And these beds will scale up to about 3,500 by financial year 25. The bulk of that incremental capacity will come in Lucknow, which is currently operating at about 500 beds, and that will scale up to about 1,000 beds, 950 to 1,000 beds.
Okay, well, sticking with today's big IPO is well-known ethnic snack company Bikaji Foods, also listed at an 8% premium over its issue price of around 300 rupees. Manglam Malu is here with the details.
Well, the bhujia is spicy, it is crispy, it is tasty, but it is also expensive because it was offered at a premium to other peers, and at the same time, with the 10% uptick that we've seen in the stock price, the market cap has crossed almost $1 billion. It appears to have gotten even more expensive. We spoke to the management today about the triggers for the company going forward. They said that in the second half there would be double-digit margin as against 7% what they did in FY22, and they are targeting 2,000 crore revenue in FY23. Why just FY23? Going forward, they believe that revenues can grow between 20 to 25%, and they don't need any capex all the way up until FY25-26, where they get to 4,000 crores in terms of revenue. In fact, they also spelled out that for FY24, if they do about 2,500 crores of revenue, 250 crores of EBITDA, it would translate into 120 to 130 crores of profitability. So using those numbers itself, if you calculate, the stock is currently trading at 63 to 64 times FY24 price to earnings. Where do the other peers trade? We have DFM Foods, which is trading at 40 times, hasn't done anything for the last 5 years. Pratap Snacks, below its issue price of over 930 odd rupees, currently trading at 35 times 1 year forward earnings as well. And why just these two? A lot of the large food snacking companies, FMCG companies, if you compare it with Nestle and Britannia, which have higher metrics as well, Britannia is trading at a discount to Bikaji, whereas Nestle at 65 times, just the same rate at which Bikaji is trading.
Okay, all right, Manglam. Thanks very much for that. Meanwhile, Rishabh Jain, the CFO at Bikaji Foods International, told CNBC-TV18 it is looking at a growth of 20 to 25% going forward. It expects 17 to 20% increase in the market share in specific segments as well.
In last 3-4 years, we're growing at 20-22% CAGR, and it's a big industry. So this industry is close to 1.5 lakh crore of markets, and we are just a 600 crore rupees. We're done, and it's a strong growth prospect which we looks in the coming decade, and it's a big industry, and we done expansion across all part of India. So basically, 240-250 crore of EBITDA will have close, 240-250 crore EBITDA will have close to 130-140 crore of PAT, because the depreciation close to 40-45 crore. That's it. Currently, our core market is giving close to 72% of our business, and जो focus market are giving close to 17-18% of our business. So yeah, of course, so focus is always growing at 1.5 to 2 times of core market. So in next 3-4 years, it will this 17-18% we'll target to grow this to 20-23%.
Okay, so that's the management of Bikaji Foods' new debut on our markets. Time for a break now, but stay tuned. We'll be back in a jiffy with all of the top stories that we're tracking. Welcome back. Well, let's get to the fourth headline that we're tracking this evening. Sources tell CNBC-TV18 that the Income Tax Department conducted searches at the premises of Metropolis Path Labs, accusing them of concealing unaccounted income. The company's stock nosedived over 7%. Timsi Jaipuria has more.
Well, that's right. Sources are indicating to us that IT department, based on its internal investigation reports, is currently conducting search operations against Metropolis Path Labs. These search operations are covered across several locations at Mumbai, Delhi, Chennai, and some places in Gujarat too. The top management of Metropolis Path Labs is also under IT scanner, and the claims that IT department has is that there is a straight case of unaccounted and concealed income. As we speak, investigations are underway, search operations are underway, and we are yet to get any quantum or any specific details as to how much is the amount of unaccounted income or concealed income that the IT department is claiming, whether it has actually got detailed reports, detailed proofs during these search operations or not. Investigations are still underway, but yes, sources indicate that enough evidence is available with the IT department, based on the internal intelligence reports, based on these only, these search operations are being conducted. Let's see how soon they conclude and what is the final outcome of these search operations. Back to you.
Okay, all right, Timsi, important story there. But let's move on to the fifth headline now. Defense stocks surged in trade today. HAL and Bharat Dynamics surged over 3 to 4%. Meanwhile, Mazagon Dock shipbuilders traded 1% higher in trade after it reported a strong set of Q2 earnings. Earlier in the day, Sanjeev Singhal, the Director of Finance at Mazagon Dock Shipbuilders, said he expects revenue growth at 25 to 30% in FY23.
We would like to revise our guideline with respect to FY23 to around 25 to 30% of growth compared to previous year. So we are expecting somewhere around 7,400, 7,500 in case all the things go as per our plan. So that would be revenue guidance for the current year. Margins, we don't expect a significant change. However, there would be a positive effect definitely on account of raising the fixed costs as the volumes go up. So I would not be very particular about the margins. We would be maintaining a similar kind of a trend. Last year also the margins were better, and a slight improvement could be there based on the higher volumes.
Okay, well, moving on to more PSU news. Railway stocks surged in trade today. IRFC and RVNL were up over 5%. However, IRCTC traded 1% lower. Vivek Iyer is standing by to tell us how these railway stocks fared in today's trading session, as well as since October.
Well, absolutely right. There's been no stopping, these rail PSUs. So what we've actually done is, since October 28th, one date from which, all of these stocks have actually started moving upwards in tandem. Also our colleague Nimish had highlighted it, and, saying that, this entire pocket was being seen quite favorably by HNIs and also being seen as quite an undervalued theme. Well, is it undervalued anymore? Looking at the price moves, you probably agree that it's not. But let's have a look at some of the moves that these stocks have seen. The first one, of course, is IRCTC. It's been flat, but however, look at some of the moves the other names have made. IRFC, this stock is up almost 19%. Stock perched at a fresh 52-week high. RailTel is up almost 17%. Again, this one too is at a 52-week high. You're talking about RVNL. This particular stock has been the clear outperformer, up almost 57%, again at a 52-week high. And RITES, this particular stock has been flat. However, if you recall, our colleague Yash had reported on November 4th that, there's a likelihood of a supply overhang due to an OFS, which is why this particular stock has underperformed relatively. Ircon is another stock that's up 34%. We also had a look at, the key takeaway from the Q2 results from these stocks. IRCTC, while earnings was the marginal miss, one thing that the market hasn't liked is the fact that the company has said that they don't plan to hike the convenience fee, so they aren't looking at any fresh triggers for this particular name. RailTel, gave a very strong guidance of revenue and EBITDA of growth of 20% in FY23 and beyond. RVNL came to CNBC-TV18 and they indicated that they intend to keep an order book of about 1 lakh crore. Very strong commentary coming in there. And Ircon too, gave a very strong Q2 with a strong order book of over 40,000 crores.
Okay, all right. That's on railway stocks. But stay with us, Vivek. MSCI released updates on the treatment of the stocks of L&T Infotech and Mindtree post the merger. Tell us about that.
Well, that's right. So the only missing piece of the puzzle as far as the LTI and Mindtree merger was the fact that how exactly would passive indices treat both of the stocks post the merger actually happens. And now that both of the companies have gone ahead and said that November 24th is the record date, that has given clarity to the index manager. So MSCI has yesterday given an update saying that what's actually going to happen is that on the trading day of November 22nd, what will happen is Mindtree will be removed from the MSCI indices, and the weightage of LTI or Larsen & Toubro Infotech will actually be increased. In all likelihood, as per analysts, this could be a net neutral event in the fact that the outflows coming out of Mindtree would actually be quite similar to the amount of inflows that go into LTI. So it's an important event in terms of passive fund management, and November 22nd is the date on which this particular event will occur.
Okay, all right, Vivek, thanks very much for that. Well, on to a CNBC-TV18 exclusive then. The revival of Jet Airways has hit a turbulent mark. Sources say lenders are likely to take a stand against the Jalan Calroc consortium in court, saying the conditions for the takeover have not been met. CNBC-TV18 reported last week the consortium is yet to make any payments to the lenders to assume control of the airline. Ritu Singh is here with the details.
Well, the impasse between the Jalan Calroc consortium and the lenders of Jet Airways is growing by the day. And in the latest development, we've been given to understand that the Jalan consortium recently moved the NCLT, seeking to take control of the airline, claiming that it has met all the conditions precedent required for the takeover. However, we've been given to understand from our banking sources that lenders will contest this claim in court, and they believe the conditions have not been met, which included securing slots, international traffic rights, which alone requires the consortium to have at least 20 aircrafts to be able to fly internationally, a condition that they have not yet met. The court has given the lenders time to file their reply, and the next hearing in the matter is the 29th of November, the date to watch out for. In other developments, the monetization plan for Jet Airways, which includes selling off about 11 of its owned aircrafts to raise some money, that has also been put on hold, given these differences that have now cropped up between the consortium and the lenders. Lenders are also wary of the ongoing investigation reports against Florian Frisch in Europe. However, we understand they've not officially sought a response from the consortium on the matter, but they do remain concerned about it. And lastly, on the matter of the PF and gratuity dues payment, which the NCLAT had directed the consortium to pay to employees, about 250 odd crore rupees, that we understand the consortium has clearly told the lenders it will not pay any additional sum of money, and it has to come from whatever has already been allotted. And that is the response they gave to us in their reply to the CNBC-TV18 query, where they said they're ready to take over the company. They met all the conditions, already transferred 150 crores to the lenders, and there is no delay on their end. And as far as the PF gratuity due matter is concerned, they've already made it clear that no additional money will be given out.
Okay, all right, Ritu. Thanks very much for that. In fact, let's stay with the aviation space. As reported by CNBC-TV18 earlier, one of the key flashpoints between the lenders and the consortium was the payment of PF and gratuity to all eligible employees until the commencement of insolvency. There has been a standoff over who will make these payments. Madhiya Mujawar has been reporting on the deadlock. She joins in with more.
Well, it clearly looks like the lenders are not keen on holding any further. As you rightly mentioned, payment of PF and gratuity has been one of the flashpoints between the consortium and the lenders. Let's look at how it started. In October, the NCLAT directed the consortium to make PF and gratuity payments to all eligible employees until the commencement of insolvency, that is June 2019. According to the calculation of my sources, this amount comes to over 200 crore rupees. The consortium had earlier told CNBC-TV18 that its payment towards all creditors is capped at 475 crore rupees. Now, in an application filed with the NCLAT on the 15th of November, the consortium has stated that if the court is expecting the consortium to make these additional payments, then they should be first made from the positive cash balance of Jet Airways and then from the 475 crores that it has reserved for various creditors. The positive cash balance of Jet that the JKC is referring to was estimated at 225 crore rupees in January when it had sought NCLT's permission to use that money. Whether the NCLAT will allow using this money to pay statutory dues is not clear as yet. Meanwhile, lenders have already taken a 95% haircut on their loans. So it was unlikely they would agree to pay these PF and gratuity dues from the few hundred crores that they're yet to receive. Back to you.
Okay, all right. Thanks very much for that. Well, on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.